Hi everyone. We meet again in another new video relating to CDCS exam questions. These questions that we discuss can be helpful to IBSL exams as well. So without any delay, let's get into the video. Question number 21. A beneficiary presents complying documents to a confirming bank under a documentary credit available by deferred payment. The beneficiary requests that the confirming bank purchase the documents and prepay against its undertaking. In accordance with UCP 600, which of the following may be the correct course or courses of action for the confirming bank? So they have given four scenarios. First one is obtain the issuing bank's agreement prior to paying the beneficiary. Refuse the beneficiary's request while undertaking to pay at maturity. Prepay the deferred payment undertaking. Obtain an agreement for recourse to the beneficiary. So we know Article 8 of UCP 600 talks about the responsibilities and the role of confirming bank. There, it clearly states how a confirming bank must act when a complying document has been submitted to it. So, according to that, if we go through the given answers, the confirming bank need not provide issuing bank's agreement if it's a complying presentation. So, one is not the correct answer, which means we can eliminate answer A. Refuse the bank's refuse the beneficiary's request while undertaking to pay at maturity. Yes, that is possible. The confirming bank may refuse to prepay at the moment while undertaking to pay at maturity because the undertaking says that the payment will be effected as agreed at maturity. As agreed at maturity. So, of course, yes, that is a possible course of action. Answer 3 says prepay the deferred payment undertaking. Of course, that is also possible by the confirming bank. If they choose to prepay, of course, they can go ahead and do so. So, that is also a correct course of action. Obtain an agreement for recourse to the beneficiary. So, sorry, no, that cannot be done in this method of documentary credit where it's available by deferred payment, especially when a complying document set has been provided. So, number 4 cannot be a correct course of action. So, clearly, answer is 2 and 3. So, here it's answer C. Moving to question number 22. A documentary credit advised to a beneficiary payable at site calls for documents to include an invoice made out in the name of the applicant. Documents presented to the negotiating bank by the beneficiary include a customs invoice, but no commercial invoice. All other terms and conditions have been met. What action should the negotiating bank take? A. Reject the documents as non-complying. Refer to the issuing bank for authority to pay. Return the documents for amendment by the beneficiary. Pay the documents as fully complying with the terms of the agreement. Now, we dealt a similar question in our previous video. So, you can refer to that for my detailed explanation where we have referred to ISBP 745 as well. So, I'm assuming you would have gone through that video. So, there we know that there is no requirement to reject an invoice just because it says customs invoice. It's not mandatory to have the term commercial invoice itself. It can say tax invoice, customs invoice, consular invoice, anything relating to that. Here, it is a complying set of documents where the invoice can be accepted even though it says customs invoice. So the correct answer here is answer D. Pay the documents as fully complying with the terms of the credit. If you like our videos and you want to support us, please feel free to contribute to our Buy Me a Coffee link. The link is given in the description box below. Do support us to make more such videos. Moving to question number 23. If the CIF or CIP value cannot be determined from the documents, a nominated bank will accept an insurance document which covers number 110% of the gross amount of the invoice, number 200% of the gross amount of the invoice, third 110% of the documentary credit amount, fourth 110% of the amount for which payment, acceptance or negotiation is requested under the credit. So here we should be referring to Article 28 where they clearly talk about insurance coverage. There under Article 28F they clearly state that when CIF or CIP value cannot be determined from the documents, the amount of insurance coverage must be calculated on the basis of the amount for which honor or negotiation is requested or the gross value of the goods as shown in the invoice, whichever is greater. So here under the four options, we clearly know 100% cannot be accommodated. The minimum percentage cover expected is 110%. And they are 110% of what? So when CIF and CIP is unable to be determined from the document, you can refer to the invoice gross value. You can refer to the amount for which payment, acceptance or negotiation is requested for. And of course, this means that it can even be equal to your documentary credit amount. Though it's not explicitly mentioned there, of course, what they are referring to as invoice and for the amount for which payment, acceptance and negotiation is requested is essentially the documentary credit amount. So all these three qualify as the correct answer. So here the correct answer would be 1, 3 and 4. So that is answer D. Moving to question number 24. A documentary credit for $150,000 calls for a full set of bills of lading and an insurance certificate to cover all risks. The bill of lading presented indicates an on-board date of 15th December. Which of the following insurance documents are acceptable? Number 1, policy for $185,000. 2, certificate dated 17th December. 3, declaration signed by a broker. 4, subject to a franchise. Now, number 1 is an insurance policy. Yes, insurance policy can be accepted as per Article 28, but the value is higher. Now, if you calculate the minimum expected value for insurance coverage is 110%. 110% of the invoice or documentary credit or the amount for which you are trying to honor or negotiate, which is here 150,000. 110% would be 165,000 US dollars. Here the policy is more than that. So yes, we can accept such a policy. So number 1 is a correct answer. Now number 2 says certificate. Now Article 28 says yes, we can accept an insurance certificate as well. But here it is dated for 17th December. While the bill of lading says, look here, goods have been onboarded on 15th December. which means 2 days are not being covered by the insurance document. So sorry, that cannot be accepted. So number 2 can't be the correct answer. So which means out of the given options here, A and C cannot be the right answers. So that itself should tell you if number 1 is the correct answer, B must be the correct answer overall. But let's see, let's read through further. Answer 3 says declaration signed by a broker. Sorry, a declaration cannot be accepted. So answer 3 is no, cannot be accepted. Finally, answer 4 says subject to a franchise. So there again, Article 28, the very last Article 28 provision tells us that an insurance document may be subject to a franchise or an excess. So that is also allowed. So here 1 and 4 are the clear answers, which means the correct answer is answer B. Question number 25. A documentary credit is issued for an amount approximately sterling pounds 40,000. Keyword me being here approximately. GBP 40,000 payable with drafts drawn at 30 days from date of shipment. Documents presented on 22nd September with bill of lading dated 1st September and for value sterling pounds 38,000. Which of the following drafts would be accepted? Number 1 says 30 days from 1st September for approximately GBP 40,000. Now here it's correct in terms of the number of days. The draft is drawn 30 days from date of shipment. So 30 days. Date of shipment as per the bill of lading is 1st September. So these two pieces of information are correct. But if you see the value says approximately GBP 40,000. Now, even though the documentary credit says approximately GBP 40,000, the draft cannot give such a vague amount. It has to be specific. So here the error is the word approximately. Since it says approximately here, sorry, number 1 can't be the correct answer. Number 2, 30 days from date of shipment, value GBP 38,000. Now here again 30 days can be accepted. No problem with that. Value GBP 38,000 can also be accepted, but it just vaguely tells us that it is 30 days from date of shipment. How do we know the date of shipment if it's not mentioned on the draft? Remember the ISBP 745 rule that we discussed in our previous video? So as per that, number 2 cannot be accepted as well. So that itself tells you that look here 3 and 4 should be the right answers, but let's again read everything properly. Number 3 says due 1st October, value 3rd GBP 38,000. Now here it is 30 days from the bill of lading dates, which is clearly 1st October. So that is correct. And the value is also correct for 38,000. So number 3 seems like the correct draft that can be accepted. Number 4 says 30 days from bill of lading date, which is 1st September, and the value is GBP 38,000. Now that also can be accepted because all the details are in line with the given information. So here the correct answer is 3 and 4, which is answer D. I hope this video was helpful to you. Thank you for listening and subscribe and support us for more videos.